Hey everybody, Gary with Basecamp Trading. Let's take a look at the 30-minute chart in gold today. And we had a couple reversal dojis that led to some pretty nice moves. This morning when we were coming into the US, gold was kind of pushing down and then we kind of went sideways. You had these dojis, doji, doji, doji. And then right here you had a reversal doji set up. To make it a reversal doji, the high has to be higher than the previous bar's high, finish in a doji, and then the next bar has to trigger it to the downside to make it a reversal doji. If it had triggered it to the upside, just be a continuation doji back to the upside. But this bar triggered this to the downside, making this a reversal doji to the downside. And this was a really strong bearish trigger bar. Left a topping tail, and then the entire body of the bar was selling. And it closed under significant support. We know the 50 and the 200 EMA on the 30-minute chart are significant support resistance lines. And we pushed down, made a strong close underneath support, left a little bit of a bottoming tail, but a strong close under support, followed by yet another really bearish bar. This bar opened right at the top, pushed down, small bottoming tail, but the entire body of that bar was all selling. The next bar opens, makes another pretty strong push down, but then we hit significantly undervalued for the third bar in a row. So we got a pretty strong bounce off of that big bottoming tail. In fact, that bar actually closed in a fairly bullish hammer. And then gold kind of chopped sideways. We actually triggered a bear flag back down. Didn't really follow through, and we just moved mostly sideways throughout the next few hours. Had another bear flag right here that triggered. Not much follow through. Did get some movement down, but definitely showing a reluctance to sell down in here. You can see bottoming tail, bottoming tail, bottoming tail, another bottoming tail, bottoming tail. So showing a reluctance to sell down below these levels. And then we set up a reversal doji back the other way. So again, this bar was lower than the previous price bar's low. Finished in a doji, and then the next bar triggered it back to the upside. Could have triggered it to the downside, making a continuation doji. Triggered it back to the upside, making it a reversal doji. And this was a strong bullish trigger bar. Opened at the bottom, closed very near the top, ran into some resistance right there, 13 EMA. Followed up by another really strong bullish bar. Opened at the bottom, pushed into the 50 EMA, and of course found resistance there. We know, again, the 50 and the 200 often significant support and resistance. But then the next bar was another really strong bullish bar. Opened at the bottom, closed at the top and above resistance. Very strong bullish bar, closing above resistance. And then gold pushed a little higher and then just kind of went sideways the rest of the day. But a real nice reversal doji to the downside with momentum confirmation. You can see that as we were triggering this reversal doji, we were also triggering a bearish inflection. Fast and slow line had already crossed to the downside. We had red histograms, a little pullback, and then continued lower. So we triggered a bearish inflection as we were triggering the reversal doji. So that's a strong bearish confirmation on that reversal doji to the downside. And then momentum kind of flattened out as we chopped sideways here. Put in this reversal doji, and as this bar was triggering that, the fast and slow line were crossing back to the upside, turning our histograms green. We started getting some separation, showing strong bullish movement to the upside, and gold made a pretty decent push back the other way. Several different ways you could have traded this. You could have just taken each doji, take the break of the doji. Your stop goes at the top of that bar by a few ticks, and then you just trail each 30-minute bar by a few ticks. So you could have had a nice move down if you were trailing that. Same thing going the other way. Take the trigger, stop goes at the bottom of the bar by a few ticks, and then you just trail the bottom of each bar to the upside. Could have caught a nice strong move back the other way. Typically, when we get 30-minute triggers, we actually go to our smaller time frame charts to reduce our risk, because on this bar, for example, you would have triggered in somewhere around 1857.90, and you would have had about a $4 risk. In other words, $400 per contract would have been your risk. this bar would have triggered into the upside at around 1841. Again, another approximately $400 risk on that one. So while that's not huge on a 30-minute chart, sometimes your risk is much larger than that. If we drill down into our lower time frame charts, we can reduce our risk and manage our trade better. One way you could have traded that was on the 5-minute chart. And you can see on our 5-minute chart right here. Right in here is where we were triggering that reversal doji to the downside. You had a bear flag set up that triggered in as you're triggering that reversal doji to the downside, and your risk is much lower. You would have had about a $2 risk on that one, actually a little less than that. You'd probably let's just say $2. That you wouldn't use quite that much, but only $200 risk on that versus $400 on your 30-minute chart. And then you just made a nice strong move down, and you just trail 5-minute pivots. And again, potential to make a nice move to the downside, because again, you would have triggered in somewhere around 1857.60, in that area somewhere, and the potential to run as low as 1835.80. Now, nobody's catching the whole move, picking bottoms, but definitely potential to make well over $1,000 a contract. And quite honestly, you probably would have locked in at least $1,600 because that ran over $1,800 to the downside. So you're risking $200 to make at least $1,600. You for sure would have locked in at least $1,600. Like I said, it went more than $1,800 to the downside, but you would have locked in at least $1,600. So nice risk reward. Again, risking roughly $200 to make $1,600 on that move. And then the move back the other way, a couple of different ways you could have played this. This was kind of a real sloppy inverted head and shoulders. I mean, it's kind of a stretch, shoulder here, head, shoulder here, with a neckline right in here. So you had, again, kind of a sloppy inverted head and shoulders, but a pattern. The play would have been on the bull flag right here because we had a strong move to the upside. Now, you had already triggered the reversal doji back to the upside when this bull flag formed. So you had a 30-minute trigger that was underway already, but you had a strong move up. I mean, this was a strong bullish bar, another strong bullish bar causing the 5 and the 18 to cross to the upside and closing well above resistance right here. 18 was your resistance, and you can see you ran into 18 here, and then a really strong bullish bar closing above it, breaking above resistance. Pushed higher. 5 and 18 are now crossed to the upside. Momentum had gone positive at this point. You set up this bull flag right here. As this bull flag was triggering, you were triggering this bullish inflection on the 5-minute chart, and a nice strong push to the upside. You would have triggered in somewhere around 1843.90, 1844, somewhere in that neighborhood. You had the potential to run up here to around 1857. So again, potential to make $1,300 per contract. Nobody's picking tops, but at the very least, strong probability of grabbing at least $1,000 out of that move to the upside, or at least potentially grabbing $1,000 out of that move to the upside, trading that on the 5-minute chart. The chart that I personally like to trade is the Renko chart, and we had a nice setup off the Renko chart as well. Right in here is where price was moving down. We'd actually changed trend on the Renko chart, making lower highs, lower lows. And right in here is where we formed that reversal doji, right in here. As it was triggering, we were triggering a wick out of the cloud setup, our 18 EMA under the 34, under the 50 SMA, wicking out of the cloud and under the smooth 50, and a really nice strong move to the downside. And Trader Pro 2.0 would have helped you manage this trade. If you had gotten out right here, you could have re-entered on the wick off the 18, pushed lower, and you had a couple other wick off the 18 opportunities, depending on how you traded it. Now, I just trail pivots, especially in a strong move like this, and we had downside targets. Our downside target was actually down here at 1836.20, so our entry was at 1858.50, and our target was down here at 1836.10. 10. So potential to grab as much as $2,000 per contract on this move down. Now it's just, again, it's all in how you're managing your trade, what your risk tolerance is, and what your strategy is. But again, if you're just trailing pivots or even wick bars and taking that right down into target, and again, we trade to targets all the time in here, and our target again was down here at 1836.20. So again, potential to grab as much as $2,000 per contract. And again, nobody's picking tops and bottoms, so no telling for sure what you would end up with, but for sure at least $1,800 out of that. You're not going to let that come back and take more than that off the table. So again, it's just all how you trade it, but a nice strong possibility to the downside. And then we kind of chopped sideways and moved around. And then right in here is where we actually set up that reversal doji back the other way. Now what we were doing in the room is we had actually put a channel in right here and right here. And we had a little false breakout. They made a little run on stops right here on this little false breakout, because you could see this was a significant pivot low, significant pivot high. It was actually a double top. And you see price was just chopping and pivoting up and down inside that zone. And then we made a little false breakout to the downside, and then we headed back the other way. And right in here is where we were triggering that reversal doji. Now we really didn't have a good Renko set up as we were heading back this other way. None of these are real, necessarily legitimate setups as far as our Renko style of trading until you broke out of the channel back the other way. So you had an opportunity on the channel break right there. Could have grabbed a little over $200 per contract. On the pullback, depending on how you're managing the pullback, this was our trail stop bar, and we actually had a trail stop failure. This is our trail stop bar. If this next bar had closed down, that would be an exit point. Instead, this next bar actually closed back the other way, set up the wick off the 18 with a Trender Pro 2.0 entry signal bar, and another really nice strong move to the upside. You had the potential on that one. Your entry would have been around 1849.10. Your high was 1857.70. So potential to grab $700-800 per contract. Again, all in how you're managing your trade on that move back the other way. So it could have grabbed a couple $100 on the channel break. If this took you out, you could have got back in right here, potential grab another $800 going back the other way. So, potentially, and again, it's all in how you're trading, how you're managing your trade, but potential to grab another $1,000 or so on the move back the other way. So some really nice opportunities from our 30-minute reversal dojis in gold today.